Jim Lord is joining us now for Financial Insights with Lord's Financial Planning. Jim, good morning.
Good morning, Aaron.
It is an election year.
Yes, it's an election year. The mail is full of stuff, isn't it?
Oh, the mail and my voicemail. Yeah. Lots of phone calls.
Lots of phone calls.
Well, how does the stock market react during an election year?
Well, I'll tell you, I read something recently, a study that Fidelity Management did. They looked back 23 years over the 23-year cycles, or not 23 years, but 23 presidential elections going all the way back to Hoover. And they found that 19 of those 23 times, the S&P 500 was actually up during an election year. So that's interesting.
That is interesting.
Yeah.
Now, is it different this time?
Feels like it.
It sure does.
You know, I think, though, instead of the election affecting the market, I think the myriad of things that have occurred so far this year really has been what has been affecting the market. So, you know, I'm not so sure it's the election affecting it. I think it's that.
Well, any advice for investors during an election year?
Well, again, my advice is going to be pretty much the same every year, and that is to work with a trusted advisor, have a written plan. You know, you need to meet with the advisor on a regular basis so that you may make some changes, but stay the course. Stay the course, Sharon. Stay
the course. Very important. Now, if somebody's current portfolio, they don't feel like it really jives with their political ideology, what would you say?
Well, I suppose we shouldn't let our ideology dictate our political, or not our political, but our financial goals, but it does. And we need to meet with a trusted advisor. That's, again, where an advisor comes in to help you chart a course to find the investments that meet your ideology. So there's plenty of things out there that you can invest in that will meet your ideology, whatever it is. Right.
Any final thoughts for us today, Jim?
Let's go back to question one. You asked about the market being affected. You know, I think the fact is that rather than the election affecting the market's a pretty good indication of maybe who's going to end up in the White House.
Oh, how's that?
Well, according to a white paper that read from Gradient Investments, that they were citing some of this research that Fidelity Management did, they found that if the market was up 3 months leading up to the election, it was more likely that the incumbent would be in office. If the market was down, there might be a change in the White House.
Really? That is fascinating.
Yep.
Wow, well, good stuff there, Jim. Thank you for being with us today. We are out of time, but of course, if it is Wednesday, it is time for Financial Insights with Lord's Financial Planning.